Good morning, Bitcoiners, and welcome back to your economic calendar, where we cover the news and analysis you need to start the week off right in Bitcoin. Today is Monday, August 16th, and we have a show full of insights for the week ahead as usual. In today's episode, we're going to start by looking at the Bitcoin options market, specifically the put-call ratio, which has reached the lowest level this year. We're going to break down what that could mean for Bitcoin in the near and medium term. We are also going to be looking at the investor composition of the CME Bitcoin futures. There's some interesting insights there as far as positioning. We're going to be breaking that down. And last but certainly not least, we're going to be looking at some interesting insights or takeaways from Coinbase's recent Q2 earnings report. So grab your coffees. It's going to be a good one. Starting as we usually do with Bitcoin, we see that last week Bitcoin closed its fourth consecutive week of gains, finishing the week up 7.23% at $47,028. Now, from a technical standpoint, this is actually a pretty positive close. As you can see here, the weekly candle for last week actually closed above the closing levels for the candle on May 10th, or the week of May 10th, which was actually that week where we saw that big drop from the 58K levels. So again, from a technical standpoint, that is a pretty strong close, as the level that it closed at was actually well above the close of this very important candle here to the downside. Among the interesting things or tailwinds that helped Bitcoin reach these levels last year was that we had some really positive details or insights from the Coinbase second quarter earnings report. Now, as you can see the article on your screen right now, Coinbase reported blowout earnings last week, exceeding expectations basically. It posted a total trading volume of $462 billion. That's 38% higher than the $335 billion in trading volume posted in the first quarter. So 38% increase in trading volume quarter over quarter. Interestingly, as pointed out by Sam Bankman-Fried, CEO at FTX, over 90% of Coinbase's $1.15 billion earnings in the second quarter came from retail trading fees. So institutional activity and subscription services makes up only 10% of the profits or earnings before interest, or EBITDA. So another interesting tidbit there was that Coinbase's active users increased by 21% in the second quarter to 68 million active trading users from 56 million in the first quarter. To put that in perspective, that means that they added close to 1 million new active trading users per week, which is roughly the population of San Francisco every week. So very impressive numbers out of Coinbase. Another very interesting insight from this report was that Bitcoin trading volume went from 39% of the total traded volume in the first quarter to only 24% of the total trading volume in the second quarter. Interestingly, Ethereum trading volume surpassed Bitcoin trading volume for the first time ever. More on this in our DeFi section later today. Going back to the Bitcoin fundamentals and market activity, we wanted to take a look at the options and futures markets for Bitcoin. First, we can start here with the options market. The chart that you have on your screen right now is the Bitcoin put-call ratio. And as you can see, that level has now essentially reached its lowest point this year, because this previous drop here was in December 21st or December 25th. This is the last time it got to a level near where it is now. And squarely, essentially last week and this week, it has reached the lowest point this year. The put-call ratio is currently sitting at 0.5. What does this mean? Well, it means that there are twice as many call contracts open as there are puts, meaning that people are basically exposed to call contracts, so looking for Bitcoin upside, to the tune of 2-to-1 relative to the contracts to cover protection to the downside. This is, to find a level that was, this low prior to the one that we just saw in January, we have to go back all the way to June, essentially June of 2020. And Bitcoin prices were consolidated. Back then, Bitcoin prices were consolidating around the $8,000 to $9,000 price mark, and they rallied from that level. And at a high level, this put to call ratio is a good indicator of bullish versus bearish sentiment in the market. And currently, it is decidedly bullish. So again, 2 times as many people are looking for upside contracts on Bitcoin as there are people looking for downside protection contracts. So again, the market seems to be, the sentiment around this positioning is decidedly very bullish. Now, looking at the Bitcoin futures, we can see some really interesting insights if we break down the composition of the open interest of the open positions in the Chicago Mercantile Exchange futures venue. And I will show you here just so that you can get a better sense of what I'm talking about. But essentially here, according to data from Skew here, we can see that this data essentially breaks down how investors are positioning themselves in the CME futures market. So the lines that you see here in different colors are different segments of investors. This green line here is institutionals. Okay, so let's for a second focus on the institutional activity, and we're going to focus also on the leverage funds. So one second. So here we can see some really interesting insights. So first, let's look at the institutional positioning. Institutional positioning right now is net bullish. So they have a net open interest of long 2,000 Bitcoin. And the other interesting thing is the leverage fund. So leverage funds have a decidedly negative open interest position in these futures. So we're going to break those two down. Looking at the institutions, it is very interesting that they are now positioned net long, as these institutions are incredibly savvy as far as how they position themselves in the market. For context, let's look at how they were positioning on the week of May 10th, the week before that large drop. And leading into that week, leading into like the first 2 weeks in May, institutions were all net short going into that big drop. Right now, they are going net long. So something really interesting, again, to keep in mind. The other interesting point to see here is that the largest negative positions, so the largest short positions on these futures, are being held by what's called leverage funds. Now, the interesting takeaway here is that the fact that leverage funds have a short exposure to this venue doesn't mean that their entire overall exposure to Bitcoin is net short. They could have many, many long positions in excess of these shorts, and they might just be using the shorts on the CME to hedge their overall net long position. So again, interesting just to keep this in mind as you look at this data. Now, stepping outside of the futures and the options and going back to some on-chain fundamentals, we can see that some on-chain metrics, the chart behind your screen right now is courtesy of Willy Woo, and who's a great on-chain analyst. This chart, which was shared by him last week, showed that the Bitcoin network has added 1.2 million users in the last 30 days. As you can see from the chart behind you as well, user growth tends to be correlated with price. And so this is yet another positive indicator for Bitcoin price potentially for the near and medium term. And now stepping outside of fundamentals or on-chain fundamentals and looking at the corporate world, we see that there was another very interesting headline broke last week that went somewhat unnoticed by some media. And that headline was the article on your screen right now, is that BitMEX actually reached a settlement with the US regulators, the Securities and Exchange Commission and the CFTC. And the Wall Street Journal reported that the settlement was for $100 million. And as part of the deal, BitMEX will have to block US residents from accessing the platform. This settlement could be positive as it sets a precedent for exchanges or DeFi platform that may suffer from similar issues. So more on what we can expect for Bitcoin in our What's Ahead section later today. Moving over to our analysis of the S&P 500, we saw that last week was yet another record close for US indices. The S&P 500 finished at a fresh new all-time high of 4,465 points, up 62 base points for the week. We saw that the NASDAQ also finished at an all-time high of its own, up 18 base points at 15,136 points. And lastly, we see that the Dow Jones Industrial, yet again, another all-time high of its own, up 87 base points at 35,515 points on the Dow. Looking at the Russell 2000, which is the index that tracks small companies that we highlighted last week, we see that the Russell 2000 continued to buck the trend last week, being basically the one index that finished down. It finished the week down 1.1%, and this could be a continuation of the trend that we described last week, in which small businesses are being hit the hardest in the current economic conditions. To highlight this point even further, we wanted to show data from a survey that was run by CNBC last week. And as you can see, the survey results on your screen right now, this survey basically showed that small businesses are being hit from many angles, including the rising cost of supplies, supply chain shocks, and rising wage costs. The vast majority of businesses were impacted by one or more of these factors. If you can look at the little chart here to the far right that says none of the above, virtually no business answered that none of these were impacting them, which is, again, something that is very important to take note of. What's happening here, at least what could be interpreted, is the big are getting bigger. It is happening at a personal investment level too. Think of the S&P 500 and the NASDAQ as a small percentage of the US population that owns assets. And by assets, we mean stocks or real estate. That segment of the economy has become much wealthier after the pandemic. Just look at real estate prices and or stock valuations. The pandemic, by contrast, and this is another data that we wanted to show, the average, and the data that you're seeing behind your screen, as you can see from the Fred chart, it shows that this is essentially median usual weekly real earnings for salary workers 16 years of age or older in the United States. Now, as we can see this here, the average weekly median real earnings for a US worker were $367 pre-pandemic, as you can see here from the chart. This peaked at $393, but is now back at $373. If we assume the current levels of $373 and we compare that to where it was prior to the pandemic, we basically get that the median real salaries have really only increased by 1.6% in a year, over the course of a year. Compare that with the S&P 500. So again, if we look at here, this is Q1 2020. So we're going to take the S&P 500 from the end of March of 2020, and we're going to compare it to where it is now. And we're going to look at what that appreciation has been. So for that, we need to go to the end of March of 2020, which is right here. Let's grab it from here. So if we draw a line from March 2020 till today, we see that the S&P 500 is up 80%. We have also covered that real estate prices in many US cities have doubled in that same period. So as you can see, there is a huge difference in the balance sheets of those who have assets and the ones who don't. How can you protect yourself from this? Consider buying assets like Bitcoin. So moving along into other parts, another interesting news that was shared in the capital markets last week was the fact that Intel, the technology giant, disclosed that it has a small stake in shares of Coinbase. So specifically, Intel stated that it owns 3,014 shares of Coinbase, which is around $800,000 at the current levels. While some companies may have a hard time getting approval to buy Bitcoin or Bitcoin derivatives for their reserves, the case to invest in Coinbase shares as part of the existing strategy may be much easier. And we could see more companies get exposure to the industry through this method. Intel could have started a trend, and we'll basically stay very attuned to see how this plays out. It's a quiet week on the corporate earnings side and on the economic data front, but we do get a look at the FOMC meeting minutes this week. More details on that economic data in our What's Ahead section later today. Moving over to gold, we see that it actually staged a very impressive recovery and comeback. It came back roaring from that big drop that we saw on Monday. So again, this is the weekly chart for last week on gold prices. And as you can see, it dipped quite a bit. Last Monday when we were recording the show, it was actually right around this range. And we discussed how this support level was going to get tested. It did in fact get tested, and it did in fact hold. We're seeing some continuation to the upside in gold now. Very interesting to see that this trend line down from all the way in August is now becoming support. So we'll keep our eyes out to see how this price action continues to play out. Gold also benefited last week from stable yields in US Treasuries. So just checking in on the 10-year note, we see that last week was a bit of a volatile one, but it settled up 70 basis points higher. It's down again this morning, but again, continues to stay within this range now for over a month, which is typically a good thing for capital markets, as they don't really have to worry about this volatile variable for now. So that was positive for gold. Looking at the dollar index, that was also positive for gold, as we see that last week the dollar index was down 28 basis points. As we know, that tends to be positive for gold as well. Now, among the catalysts for gold in the coming week are the FOMC meeting, the meeting minutes that get released this week. More on that in our What's Ahead section. This may reveal more insights into the inflation expectations of Fed officials. And the other thing that will be playing into gold prices this week is the geopolitical tensions building in Afghanistan. More on this in our What's Ahead section. Moving over to our DeFi analysis, we see that last week the DeFi index came back roaring and it closed higher by 19.26%. Checking in on Ethereum, we see that Ethereum also had a positive week, up 9.82%. at $3,311. Both the DeFi index, so if we look at the close around Ethereum and we look at the close on the DeFi index, both of them close at the highs of the session, which is typically a positive sign of continuation for the week ahead. Also of interest is that we are starting to see DeFi outperform Ethereum to the upside again, and Bitcoin. So we saw the DeFi index up 19% versus Ethereum up 9% and Bitcoin up 7.23%. So quite a difference in magnitude in that move higher. Now, while DeFi tokens outperforming can be contradictory to the seemingly unworkable regulatory framework out in the United States, it is important to understand several nuances here. One is that the law will not come into effect for 2 more years, which is the equivalent of a decade in the crypto industry. Additionally, the debate in Congress signaled to the market that there is a strong lobby or a strong crypto lobby in Washington with a lot of resources and a clear mandate. The industry has 2 years to educate regulators to benefit the industry and to ensure its survival in the current form. It is a steep hill to climb, but there are a lot of brains, money, and most importantly, time still left. Elsewhere, we see that institutional appetite for Ethereum, a trend that we have been highlighting here for several weeks now, continues to strengthen. And we're going to share an interesting article that came out last week out of the block. And this article basically reads, the one you have on your screen right now, that both Fidelity and NYDIG are being pushed to offer more Ethereum services by their clients. NYDIG is already reportedly offering Ethereum custody to select clients. Ethereum has formally broken into the institutional scene as an investable asset, and companies need to adapt. Moving over to our Bitcoin mining difficulty commentary, we see that the most recent difficulty adjustment kicked in on Friday, bringing difficulty up by 7.31% at 15.56 terahashes. Now, hash rate continues to pour into the network, with the next adjustment already projecting a 3% increase in 2 weeks' time. Now, another interesting data point that happened this week in the mining space, we're sharing right now the breakdown of hash rate by the largest pools in the industry. And over the weekend, there was an interesting point where Foundry USA, the largest US-based mining pool, mined the largest share of total blocks. So at the time of writing over the weekend, Foundry USA had mined 13.3% of all blocks in the last 24-hour period, making it the first time that a US-based pool was at the lead in any sort of time frame, which was very meaningful, and it's starting to show some glimpses of a change of the guard from east to west as far as mining hashing power is concerned. So interesting to see, and again, we do believe this could be positive in the long term for Bitcoin. Checking in on the mempool, the mempool has remained incredibly empty, which is actually a great thing. On-chain transaction conditions don't really get much better than this, so take advantage of it and move your sats around on-chain if you want to. Now's a great time. And as always, we leave you with what's ahead for the week. It is fascinating to see Bitcoin continue to captivate minds all the way from Manhattan to Nigeria. This week we saw some really interesting information that really elevates or essentially showcases this point, and we want to share some of this data with you. So the data that you have behind your screen, and mind you, the data on the survey the participants of the survey were people that were familiar with technology. So again, important to realize that the sample size here is not millions of people, but it does give us a pretty interesting insights as to some of the trends in these countries. So in this chart, Statista essentially shared that 32% of the respondents in Nigeria have essentially used or owned cryptocurrencies as of 2020. This is a massive share of the population, whether the sample size is large or not, and of course it can get better, but it's a great glimpse into the trends that are occurring in Nigeria right now. Now, contrasting that, and in the same week, we saw the headlines that essentially Neuberger Berman, a Manhattan-based investment firm with over $400 billion of assets under management, announced that it would allow its $164 million commodity fund to place indirect investments in crypto derivatives. So very interesting to see the breadth of essentially how people in Nigeria and Manhattan are all finding benefits in Bitcoin, which is fascinating. And checking in on the corporate treasury side, we also had an interesting headline last week that said that a publicly listed insurance company, Metromile, the article on your screen right now, announced that it had purchased $1 million worth of Bitcoin for its balance sheet, with plans of purchasing 9 more million throughout the quarter. So very, very interesting. The corporate treasury trend continues. Bitcoin continues to help people in the streets of Nigeria, and Bitcoin continues to lure investment offices in Manhattan. So the breadth of Bitcoin is just incredible right now. So stepping out from the news for a second, the infrastructure bill that is now behind us has many essentially left wondering themselves the question of what now? What happens now that the US infrastructure bill has been passed and that there is this new regulatory framework that is going to be coming into play for Bitcoin and crypto in general? The approved laws do not go into effect until 2023. Which means that the industry has 2 years before it has to comply. This is a long window of time given the speed of innovation in this industry. And to close things off, again, this is separate from all the other topics that we've been covering, there is a lot of tension brewing in the Afghanistan conflict. Geopolitical tensions tend to strengthen the US dollar and gold as many fly to safety. This in turn is not great for stocks. Markets in general could be in for a volatile week, so just keep an eye out. And now, as always, we wrap up with a summary of all the upcoming economic data and earnings reports for the week. So on Tuesday, we get US retail sales at 8:30 a.m. Eastern. We get US business inventories at 10 a.m. Eastern. On Wednesday, we get US building permits and housing starts at 8:30 a.m. Eastern. And at 2 p.m., we get the very important FOMC meeting minutes release. investors will be looking to read through the tea leaves to see if there's any new information around Fed officials and their posturing around inflation and interest rates. Additionally, on Wednesday, NVIDIA, the graphics card maker, reports after the bell. And on Thursday, we get initial and continuing jobless claims out of the US. So we get another look at the employment market in the United States. So we've covered a lot today. If you enjoyed the show, if you like it, I welcome you to hit the like button and subscribe. Share it with your friends as well. If you don't yet have a Ledn account, I welcome you to check out ledn.io and learn how you can start earning up to 6.1% interest on your Bitcoin and 8.5% APY interest on your USDC. We also have market leading rates for your Bitcoin-backed loans if you have Bitcoin, need cash, but don't want to sell it. So check us out, everybody. Have a wonderful week and see you next time.